Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that
When it comes to preserving your wealth, the crucial question to ask is, how much does it cost each year to maintain an asset in pristine condition? This question leads us to consider the concept of useful life, which is closely related to what the Bitcoin community refers to as stock to flow. Both concepts revolve around the longevity and value retention of an asset, but they do so from slightly different angles. Michael Saylor emphasizes that most financial assets, whether they're stocks, bonds, or real estate, face ongoing costs that erode their value over time. For example, if you invest in a currency like the Argentine peso, the inflation rate is so high that your money loses value rapidly. 98% inflation can deplete your capital within 2 years. Similarly, the Turkish lira and other currencies have similarly short useful lives when it comes to preserving wealth.
if you're looking for the useful life of your money in an asset, then the way to figure it out is ask, how much does it cost every year to maintain that asset in pristine condition? What do I have to spend in order to avoid depreciation or decay? It turns out that that useful life, is very close to something we know in the Bitcoin community as stock to flow. They're very related if you're measuring them in years. Many individuals and most corporations, they use financial assets to preserve capital. And this is the source of a challenge for us. Let's talk about financial assets. I want to keep my money for a long period of time. Start with $1 billion, put it in the peso, and the money is decaying in 2 years, right? A 98% inflation rate strips you of your economic energy or your capital. This is not a good long duration asset. The Turkish lira, your capital lasts 3 years. The US dollar, under traditional monetary inflation for the past century, might last 14 years, but it's not like you have it for 14 years. The life is being sucked out of you linearly over the 14 years. Put your money in a hedge fund. What's the annual cost? It's 2% management fee and then 20% of the upside. About 4% a year if you're investing in normal assets. That means it's a 25-year asset. Treasuries, you're going to get a yield, but the 3.5% after-tax yield goes against the 7% monetary inflation. Maybe your money lasts 30 years. Capital in a mutual fund where you pay a 1% fee, 100 years. That's about the best you're going to get. If you manage to buy a diversified portfolio at 10 basis points, the counterparty risk is going to drive you to a 1% cost. Those are the things that dilute the value of your capital over time. And if you want to maintain economic energy, you have to fight against that friction. Well, most people realize that's a frustrating endeavor and it's a no-win endeavor. So they give up on financial assets and they start turning to physical assets to preserve capital. Well, here's the physical asset, a Ferrari. Not a good way to keep your money forever, though, because after 5 years, you've spent as much on the insurance and the upkeep and the depreciation as it's worth. Yachts aren't much better. If you spend 10% of your money operating it, you also get hit with depreciation. Don't store your money in yachts. A home in Miami Beach, if you buy a $10 million house, you better come up with $10 million to maintain the house over 17 years. Now you've got no money left. Silver, 22 years. A warehouse, 40 years, maybe 50 years. A bar of gold, 62 years. A painting, 72 years. Land, the average property tax in the United States is 1.1%. That means your money is going to last 91 years unless the government reassesses the value of your property. Then it's going to last less than 91 years. So physical assets you might think might last 1,000 years, probably about 50 to 75 years is the best you're going to do. Entropy is diluting the value of your physical assets. It's sucking the capital, the energy out of them. There's a reason it's called earth and not heaven. Because politicians are very creative. They got a city tax, a county tax, a state tax, a federal tax, a transfer tax, a usage tax on the property. And if that doesn't get you, there's rent control, price control, or a culture shock. Then you got competition. You might get discriminated against. There's recession. The currency can collapse. Your tenants won't pay you. Someone will slip and fall on the front sidewalk and sue you. There's weather, war, crime, and catastrophe. And if energy prices go through the roof, it's going to be hard for you to make a go of it.
Michael Saylor's insights highlight Bitcoin's unparalleled potential as a long-term asset for preserving and growing capital. Unlike traditional and physical assets that suffer from various forms of decay and high maintenance costs, Bitcoin offers a revolutionary solution with its low custodial costs and extraordinary longevity. By trading temporary assets for Bitcoin, investors can secure a more stable and prosperous financial future.
What is Bitcoin? Well, take your Bitcoin and put it at scale with a custodian, an institutional grade custodian. You pay 10 basis points. By the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't teleport the King Ranch, and so Bitcoin is that thing that you can move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset. And what happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want the Bitcoin. If they have a choice between owning the Bitcoin and owning the ranch in Texas or owning the bar of gold or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction. Well, digital capital is returning 55% for the past 4 years. Financial capital, the best in the world, is the bond. It's minus 5%. Imagine capitalizing your company or your country on a minus 5% instead of a plus 55%. It's obviously working. And now let's come back to my chart here. Global wealth, we can look at it like this, and we see the little Bitcoin, square in the left corner. But what's happening? Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then. What about the rest of the assets? Well, I actually think that AIs and technology are going to revolutionize tech. We had no companies worth $1 trillion, then we had a bunch of trillion-dollar companies. You're going to see more because you're going to see companies with 100,000 AIs and no employees, and they're going to do the work of companies that used to have 100,000 employees. You're going to see mega corps develop, shipping robots and self-driving cars, and a company that gives a personal physician to 1 billion people without any doctors on the payroll. So clearly equity's going to grow fast. Gold's going to get demonetized. Land will be less monetized. But look, here's the future in 2045. Doesn't look that revolutionary. It looks like today. It's just that Bitcoin is visible on the chart to you. How do you make money? Well, let's talk about individual Bitcoin strategy. What should you do? Make Bitcoin your primary treasury asset. Convert your excess earnings to Bitcoin. Utilize subsidized credit. If the government will loan you money, borrow the money at cheap rates and buy Bitcoin, and find a tax-efficient way to invest the Bitcoin. What shouldn't you do? Don't quit your day job. Don't lose your focus on Bitcoin. Don't use margin loans and trade with leverage. You get wiped out while you're asleep on a Saturday night. That's not good. Good? 30-year loan for 3% backed by the government on your land. Bad? Overnight 10x leverage. So what's a typical person? Well, we actually model an individual, and we said, what if you had $750,000 in net assets and you made $200,000 a year and you're going to make 5% more every year, and you got a savings rate of 25%, and you can invest $50,000 a year. Well, there's a lot of strategies. You could be the normie and do a normal strategy, diversified portfolio. You can be a 10%er, and you can put 10% of your assets into Bitcoin. You can be a BTC maxi and put 80% of your assets and put 80% of your earnings into Bitcoin. You could be a double maxi, and that's when you basically take an extra $250,000 loan against the house. And then the triple maxi is you finance the house for Bitcoin, you buy Bitcoin, you flip all your assets to Bitcoin, and then you move to a cheap tax jurisdiction where you actually can avoid some taxes and invest an extra $50,000 in Bitcoin, maybe a Singapore or UAE or something. What's the result? Well, this is the result. The normie ends up with $8 million in 21 years. The 10%er will more than double that. The maxi ends up with $100 million. The double maxi 150, the triple maxi 214 million. You can see the power of leverage, and the choice is yours.
As you reflect on these insights, think about how Bitcoin could fit into your own investment strategy. Whether you're just starting to explore cryptocurrency or looking to optimize your portfolio, understanding these principles can help you make informed decisions about securing your financial future. Thanks for watching. If you enjoyed this video, don't forget to like, share, and subscribe for more insights on investment strategies and financial tips. Leave your questions and comments below. I'd love to hear from you. See you in the next video.